Good morning, everybody. It's Gil here. We're still having issues with Dr. K's microphone. We don't know what it is. It's probably just gremlins as usual. But I guess what we're going to do is I'll keep him up on IM, and we'll get him to answer some questions. Somebody says stay away from those knockoff brand mics. I'm using a Logitech, and if you guys recall, a couple of weeks ago, my microphone suddenly fritzed out and decided to just go off, and I had to replug it. So I don't know, Dr. K, you might try that. But he's been in and out, and we still need to do this webinar. Now, here you got this action going on today with the jobs number, which obviously was a market-moving report. And we have a gap move on the NASDAQ composite as well as the S&P's straight up on the day, and so more uniform movement there, but you see the gap move on the NASDAQ, which is now leading the market to the upside, and it's made a 12-year high roughly, maybe a little longer than that. And so it's moving pretty sharply. Dr. K and I were talking a couple, 3 days ago, and our feeling was that you might get an index rally, but it's still a sort of choppy situation with respect to the individual stocks. And I think what happens today is, okay, we know we're moving higher. I think volume's probably running at a good clip. This morning, well, you're running up a little over 5% higher in the NYSE and a little over 12% on the NASDAQ. So it's not blistering volume, but you do see a lot of stocks basically jacking higher. So, if people are asking, does it look like today will qualify as a follow-through day? Well, right now you have the NASDAQ, which is leading the market, is up 1.3%. That might be just sufficient, I believe. Dr. K, you can IM me and let me know if a 1.3% move or what it is you would be looking for a follow-through day. But I think, in general, it's just very tricky here, and we'll just have to see what happens. I think there are some situations that you can trade, and those of you who've been on the chat room when I come in, there have been some decent trades to make, but it seems like you get 10-15% out of something, and you're probably smart to be taking it. Not a lot of stocks are trending real hard here to the upside. A lot of the stuff coming up today is stuff off the bottom. Obviously, we hope that you don't own too much LinkedIn, but I guess my feeling on LinkedIn is you're moving higher yesterday. This volume doesn't count because it's including after-hours volume from yesterday, but the stock had been moving higher on relatively better upside volume, but nothing above average. And then yesterday they started streaking it to 200. And, of course, that brings in potential for round number resistance or possibly Livermore's century mark rule, which indicates that a stock going through a century mark, 100, 200, 300, etc., for the first time can usually have a pretty strong move through that level. Otherwise, if it fails at that level, that might be trouble. And so LinkedIn in this regard reminds me of Apple in 2008 when it hit 200 and failed and broke down. You got huge volume on the gap down. I talked to Dr. K this morning, and he indicated that he wouldn't be buying the stock here, and I think he would be selling it, Dr. K. Is that correct? You can IM me on that. Let's see. We're going to try and wing this today. You might even try your mic and see if it's working, but we're not really sure what the problem is. What's that?
I haven't changed. You can on my end. I think there's nothing.
Okay, you're still coming in and out. I mean, the thing is, but with the big, you can IM back to me.
How about now?
Still a little flaky. I love technology.
Yeah. Okay.
Yeah, you're still in and out. Why don't you just IM me what you would do with LinkedIn? Would you sell the stock here?
I'll just,
let's just wing it that way. I think that's going to be the most efficient way.
Okay. So go ahead. What was the question?
Would you sell LinkedIn here?
I would because it's well, we had a mini gap down on an earnings report that wasn't favorable because of the weak forward revenue estimates. Right. And so it's heading right back to the 50-day, but I don't like that. It's huge volume, so I would have sold it at the open and take my profits, assuming that I'd been buying it earlier. or at least break even on it on the trade at the very worst.
Right. You're coming in pretty clear now all of a sudden, so that's good.
That's great because my internet's fine. I mean the miking system. I have two mics on this computer, so if one doesn't work, the other backs it up.
Yeah.
So I've
And
never had an issue with this. So I'm kind of stymied here because I did a
well, I
reboot
mean,
and everything.
stuff
But
like that
anyway,
happens, that happens. That happened to me a couple of weeks ago. If you recall, my microphone just decided it wasn't going to work anymore, but I unplugged it and plugged it back in, and it worked.
yeah. Well, I got
So,
two. So usually one takes over the other one if there's a failure. So yeah. Again, and I did a conference call earlier, like just yesterday, so it's fine. Anyway,
yeah,
just
okay.
could be
So, but
coincidence.
anyways, you seem fine now, so we'll kind of proceed with where we're at. But we were talking the other day, and you still were kind of iffy on stocks, but the indexes look like they could continue to rally. Do you still feel the same way about that?
Yeah, nothing's changed. What's nice is that the QE push is there, and we're just riding the uptrend, and the unemployment rate came in stronger than expected. That, of course, all those numbers are highly suspect, but all that matters here is where the big money's flowing, and certainly the big money liked today's unemployment report, so we got gapped up and we're moving higher. And meanwhile, a lot of stocks are still treacherous in this environment. This whole year has been quite treacherous, with leading stocks going higher and then um, and then and then having a serious fault of some sort. LinkedIn's a perfect example, and a number of other stocks this year have done similar things. So I prefer to play lightly, very lightly, if I'm going to invest in any sort of stocks.
Yeah, my approach has been to look for things that are a little bit unorthodox and stocks coming up the right side. If you guys recall the other day, we put out the P systems. This is a little bit of a wild one because it was above the 50-day, but it bounced, you notice, right off the 10-day moving average. And the irony here is that the stock actually needed to pull down in the morning after the earnings report in order to create a valid pocket pivot. Otherwise, if it had moved up from here, say, up closer to, say, to 36, where it closed the previous day, that would have been extended from the 10-day and might have been interpreted differently. So you can see how you actually needed that pullback to the 10-day moving average to create that pocket pivot. And, of course, it runs up 10, 15%, and I think in that case you take your profit. You're pulling in a little bit now. There was news this morning that Staples is now carrying their consumer 3D printer. My son's been bugging me to buy one so he can print out stuff for Minecraft, which is a very popular game, I guess, among the preteen set, maybe beyond that for people who refuse to grow up. But outside of that, I don't really see any major use for it. I really can't print out 3D charts yet, and so I think when somebody comes up with 3D charts, that's maybe one for you to work on, Dr. K. Then maybe I would get a 3D printer. So, but I guess maybe that'd have to be some of those heat map sort of things. Anyways, I'm just going to go through a few things I'm seeing. And my approach in the market has been to look for things coming up the right sides of bases. Okay, another obvious candidate there is Facebook, which has rounded out this pattern here. And I think in general, you'll notice if you look at the chart, mostly upside volume is dominating. And the one thing I like here, if you look at the weekly chart, this actually looks pretty good because you're seeing the blue volume spikes, particularly over the last month or so, last couple of months, specifically the last, say, 10 weeks. You're seeing blue spikes dominate. You're moving above the 50-day moving average now, this week, and volume is up. You had a very strong high-volume move yesterday. Now you're pulling back. I think it should hold the 28 level, so I consider it viable on the pullbacks here if you want to try and play that. I also think if the market continues higher, they will probably drive Facebook up as well. Remember that estimates for next year are 73 cents a share. So I think when you look at that and you compare it with other stocks that are in that space, that's really not too bad. And I think given the fact that they're showing some improvement in the mobile area, might give the stock some impetus, and it is very liquid. So but 0% earnings growth in the most recent quarter, unfortunately in this market, that seems to be what has been ruling the day, and some of these really sharp moves up off the lows. I'll give you some examples of stocks. And I'm noticing today that You know, the builders obviously were doing that, coming up off the lows, and now EXP is trying to come up lower. You notice it's stalling a little bit, so still, you know, a little bit iffy. Korea, I hate this stock because it's shaking me out. You know, I use 4 or 5% stops, so if I'm buying somewhere in here, thinking it should hold above this move on this day where you had the big volume on earnings, and instead it drifts down, starts to bust through the 10 and the 20 day. Excuse me. And then, of course, it turns around. Volume's a little better today. I guess this might qualify as a pocket pivot, but it's questionable whether you need to exceed this volume. Dr. K, if you can comment on this one, because it gets a lot of questions. Do you consider this to be more of a positive day, this big volume day where it closed near the top of the range? Well, let's say well in the upper three quarters, I would say, or in the upper three quarters. Do you consider that constructive, and would you view that day as a down day? Well, now we can't hear you, so you could IM me on that one. Nope, I guess he's disappeared.
Here, how about now?
Here he comes. Okay, he's going to answer from IM just because he is flaking in and out. I think it's Chechnyan terrorists are sabotaging the British internet system right now. Go ahead, Dr. K. How do you view this day? Positive? Korea is a gray area, but since it closed down, it is not a pocket pivot. The tail is very long, so it got support. So, you know, so it's still questionable, and we'll see where this thing ends up today. It's up a couple of bucks, but I hate it for shaking me out. But, you know, that happens, and I don't really worry too much about it, because if you take a small position and test something out, and you get stopped out and you're running tight stops, it's really a minimal impact on your portfolio. So I'd rather play it safe than try to stick my neck out unless I feel very strongly about something. And those of you who've been on the chat room know that I've been sticking my neck out on Netflix, but now we're into the 8th day after the Bible gap up, and using Dr. K's rule, 6-day rule on this, it's starting to get a little long in the tooth, and it may break down here. So if this thing doesn't get going very soon, this could be an issue. So I think that's trouble. Looking at some other things, let's see. Lumber Liquidators is holding the Bible gap up, so there's really nothing going on. Looks like it needs to pull back, though. Other stocks have been keeping an eye on Lionsgate Entertainment. You know, had this pocket pivot here, then a pocket pivot breakout from a 3 weeks tight formation. On the weekly chart, you can see these 3 weeks closing tight right in here, and it continues moving higher. These stocks, media content stocks, have been doing reasonably well. And I think this is the leader in the group, but that one's doing okay following that pocket pivot. Let's see. Regeneron, turns out that Allergan's drug for macular degeneration is on hold, and so Regeneron takes off on that news and launches up off of the 10-day moving average. It was added to one of the S&P indexes, so that's why you have this big spike. Somebody asked a good question. Is that if you have all this volume in the stock, why doesn't the thing take off if people have to buy it? And the answer is that sometimes that will be the case, but sometimes it's simply arbitrage. So in this case, it was probably arbitrage, and that people were able to get the supply they needed to be indexed. And I don't think it's that huge of a weighting. So on that basis, it's really not that difficult, probably, you know, to cross some shares. Of course, if anybody sold it that day, they're probably wishing they held it. But, you know, that thing's going nuts. It could be a little climactic in the short term. But the stock, it's hard to view this as being later stage based or not, because you haven't really undercut any prior lows in the base. Every time it pulls back, it sets up in a new base. You might consider this an undercut. So it depends on whether you're looking at this as a first stage or second stage base. If it's a later stage base, is this a climax top? Doesn't really look like it yet, but it is getting a little bit frothy here. So, you know, in my view, if you're up 20-30% real quick like that, it wouldn't hurt to take some profits. You could hold core position. I noticed yesterday Omega Healthcare, you had a continuation pocket pivot off the 10-day moving average. Notice how the stock moves along the 10-day moving average, doesn't really ever violate it per se, but it does continue with a pocket pivot here. That's acting pretty well. Another one I was looking at is some of these oils are coming up. Look at Bonanza Creek Energy. Now, I'm looking at this one. It's not enough volume today for a pocket pivot. It seems like we'll see it needs to be higher than this bar here 3 days ago, and that is 520,858 shares. So if that occurred, it's a little V-shaped, but it is coming up to the 50-day and breaking out of this little range it's been in. So it may be trying to turn around, and if you look at it on a weekly, you notice as you came down here, you got hit with volume off the peak, which makes sense given the run. And then what you see here is, let me pull out this. On this day here, you're seeing support because it's closing in the upper half. The next week it closes down, but volume is lower. And then last week, you close a little bit off the lows with volume picking up slightly, and you've been moving higher on lighter volume. So not really showing. It's showing support off the lows, but not any thrust coming up to the upside here. And you even notice today you're not seeing big volume in it. But you know what? This kind of led me to a little theory here, and that is, as I was telling you, I look for these stocks showing big support in the bottoms of bases as they come up the right side, because my sense is, at least from a trader's perspective, in trading short-term moves and 3D systems and playing around with FB and other stocks that have been coming up the right side, it seems like you get better moves out of these things. And so that's been my approach, and it's more of an active trader's approach. And also looking at stocks that people, I can hear you typing back there, Dr. K, maybe you're working again. But looking at stocks that maybe are a little bit unorthodox, and for those of you who are in the chat room, you know, back down in here I was talking about Solar City, and this thing's gone nuts. And you look at Tesla is another one we're talking about down in here, and it's doing well. Now I think on Tesla you have a breakout. Let's show this. Here's, I think stock came public here. It had a big move, but then kind of failed and resetting, and now it's trying to come out again. You know, here's this long, ugly base. If we kind of shrink it down, that's pretty ugly looking. But it finally does come out here. I would consider this a first stage base. And so what I'd be looking for now is the stock to settle in and probably build a second stage base. You know, it's a little bit of an unorthodox play. It's not like you know, 6% earnings growth, but that's on an absolute basis because of the fact that they're coming from negative numbers. And so see, I'm trying to pull up. There we go. Yeah, a negative 65 cents. They're looking to earn their first profit, though, of 4 cents in the next quarter. That would be up 104% on an absolute basis. So it is something of a turnaround situation. I think it definitely deserves your attention here. But I think at this point you're essentially looking for a second stage basis set up, and maybe that needs to happen. But I should have listened to myself in the chat room and bought the stock along with Solar City. Another one that we were talking about is in solar, which is First Solar along this tight flag formation that it formed right in here. But it was only 1 week. On the daily chart, though, you saw it come up off the 10-day moving average and move higher, and it's been trending higher. I'm still a bit skeptical about the long-term situation for First Solar. Now, SunPower, some of you may have watched this yesterday. He actually came right off the 10-day moving average on what looks like a pocket pivot buy point. I think maybe it would be worthwhile trying to come in on a pullback closer to 14. It's holding up pretty decently right now, but again, this is very similar to First Solar and the whole situation with the solar stocks trying to turn around. So you're seeing this breakout, you see a shakeout and then a breakout, and now here's a stock on the weekly chart trying to move higher. So you're running right now about let's see, well, full point, yeah, 7-8% past the peak of this base here, if you want to call 14 the top here. But it's interesting how, you know, again, these are these unlikely candidates that seem to be acting well, and they don't necessarily show these great earnings numbers. You know, I'd also point out Yelp yesterday I thought was a great trade on the day. Again, I ran my pre-market screen and noticed that it was gapping up. You know, and also those of you who've been hanging out in the chat room, we've been talking about it, and the growth in mobile advertising being a theme for the stock. But notice how it did sell off before the earnings announcement, but it became viable on a trading basis. I know, Dr. K, you were skeptical of this just on the basis of its ability to generate a longer-term trend, and that was the reason we didn't put out an alert on it. But it is working. But what I find in this market is that the technicals seem to rule. If you're seeing a good pattern set up, it's worth a shot. And in this case, this is a nice day trade because he ran up a good 10% from the 29 area, and it actually hung out there for a little while early in the day before going higher. And so that's a pretty nice move. Now, another thing to notice here is if you look at the weekly chart, Yelp has been pretty sloppy since they came public, and now here they come flying out of this ugly-looking base, but maybe this thing works. I might expect it though to pull in and do a little bit of backing and filling. It did get downgraded to a hold today, and the company is losing money. So, but that's the kind of stuff that's working, and so you're kind of torn. Like Dr. K says, it's a higher risk proposition, and so you're in this position where the trade is there. If you can tolerate the risk, then you can go for it. Yelp is a trade I'd go for yesterday on the gap up, mainly because we'd already been talking about this and how there seems to be a theme in improving mobile advertising, and that could be a driver, a group driver for internet and social media, particularly related stocks, and I think that becomes part of the issue for Facebook as well. My guess is that if the market goes higher, you're going to see Facebook go higher, and I think it could continue a fair bit higher. It seems like institutions are coming into the stock. I think some normal profit taking given the sharp move up off the 200-day moving average in here, so it might noodle around, but to me I think it looks viable coming in. But I did want to get back to what I was talking about with Bonanza Creek Energy. I also noticed, was that one? No. What am I looking at here? CVI, which is another oil, this is a refiner, coming up the right side. And, this is kind of the theme that we've seen in this market. Stocks breaking down and they round out and come back up. Well, the breakouts sit there and draw you in, but don't really go anywhere for you. And in most cases, it's pretty minimal movement. Outside of something, say, like Regeneron, which had a nice pocket pivot right here, and we did flag that with a report back then, and it's had a great move since then. But, it's sort of a crapshoot there. Feel free to IM and spew stuff at will, Dr. K, while I'm talking. Let's see. I'm going to go another gap up yesterday that I saw was Generac. This is these guys make generators, and you had a big gap up yesterday on earnings. They came in with, and of course, Generac came in with 26% earnings growth. Yelp is losing money, and they had better gap up. So yesterday, this thing held above the intraday low, and we had somebody ask us what we would do with the, how should they manage this position now? And I have to tell you, I hate that kind of question because it tells me that as much as we try to teach people things, they're still wanting to rely on what we think or some opinion that we have that is based on some magic perception that we have that can tell you whether the stock is definitely going higher or whether it's definitely going lower from here and it should be sold. You have to excuse me. Spring is sprung out here in Playa del Rey, and we got a nice warm day and hitting my allergies just a little bit. So, but here's what I would say: if you own this position and you got a nice move on the stock, then you want to be happy about that. Number one, but number two, how do you handle the position? And when someone tells me that they see this action, I feel like it's kind of depressing to me because I feel like I haven't succeeded in teaching them, and probably Dr. K feels the same way. Some basic approach based on rules that we already know that we have. And so in this case, the low of yesterday, if this is a viable gap up, the low of yesterday would be your stop. Therefore, if you own the stock from before, then we'd likely use that as your downside guide if the stock broke down, and you'd bag your profits. Otherwise, you might want to give this thing a chance. There is a little bit of overhead from this side, and keep in mind that you broke down very hard and you have a big gap in here on volume, and so you can expect some overhead supply to come into play here, and that's probably what turned it south. I don't know what the deal is with generators, and maybe that's big business, but Generac isn't looking for any huge growth in 2013. 2% annual growth with another 2% growth estimate for 2014. So they have a decent return on equity, 35.8. So there's some aspect attractive there, but I think net, if you still own this thing and you have this gap up, there's some overhead. But on the other hand, you have a ready guide here in terms of what would push you out of the stock. So I would ask you guys, for those of you prone to asking questions like this, try to put it and frame it in terms that you can understand. So in other words, it is a Bible gap up, so that readily that can readily apply some rules there that can tell you how to handle the positions. So I always hate it when it seems like someone's asking us whether we have this crystal ball that can tell you that, whether we have this crystal ball that's going to tell you where it's going from here with any kind of certainty. And as you all know, I pawned off my crystal ball for a new Stratocaster. Anyways, so somebody asked, what is the best way to see how volume is tracking compared to yesterday? Well, you can go to investors.com, and you can see the percentage moves there. So here's a nice move today in one of our old friends, InventSense. You can see here it undercuts all the lows of this big ugly base, and today they're running it up. I think they beat by a couple of pennies on earnings last night. Runs into the 200-day moving average, and you've got resistance. So this really isn't anywhere near being set up in a rational or coherent buy point. So for the most part, it's just a big bump off the lows. It's nice to see them though, come back. The whole world is short the stock, and that's a nice move. But it's not anything that we see as viable. So somebody asking the question, would you use the 50-day as a stop? Dr. K said he would have sold it this morning at the open, and you had a shot to sell it. The high today was 187.75, so you had a shot to get rid of it. This sort of big volume gap down is not good. My view is that I think the earnings guidance, or the revenue guidance rather, this sort of indicates that the forward-looking potential for LinkedIn maybe just isn't there. And when you're selling at 143 times forward estimates, you really need to show that you can sustain the growth. And on the other hand, the stock's had a pretty nice move, and in this market, maybe that's all you're going to get out of it. But all we know is that if we owned it, we would be selling it. And we actually did have some going into yesterday, but we sold it around 192, which was fine with us, and because it did go higher. Remember, if you sell anything, it's always going to go up just a little bit more to piss you off. That's just the way the market works. Accept it. Q-Core acting strong after earnings, someone points out, and this is a true story. But you're straight down, straight up here, and trying to come up the right side of this big ugly pattern. So not something that we're interested in buying. You could interpret this if you wanted to as some sort of bottom fishing pocket pivot. You can see here though you have a golden cross, the 50-day moving average moving above the 200-day. So if you believe in that sort of stuff, maybe it is viable. I don't know, but it's not something I'm going to touch. Somebody says, Captain Bernanke has turned off the no seatbelt sign. Feel free to move about the cabin. No, he's actually turned on the no seatbelt sign. Free drinks and peanuts for everyone, as long as it includes martinis. PRLB. Oh, I love Proto Labs. Here we are breaking out to new all-time highs after this V-shaped move. The way I'd have to interpret this is there's no buy points on the way up. You might look at this. We were looking at this this day. They came out with earnings, I believe, and they sold off and then closed above the 10-day and the 50-day, but it was still down on the day, but the volume was pretty heavy. That turned out to be support for the stock, and it has moved higher. Now it's breaking out today. It looks like your volume rate is running pretty decently right now, 80% above average right now, so that's not too bad. But it's such a volatile little squirrely stock. Look at the weekly chart. I mean, these wide ranges, and just all of this craziness in here, and it makes it very hard. No areas really of any tightness in the pattern. It makes it very hard to deal with it as far as sticking with the stock. But it is going higher, and that's pretty much the bottom line for now, it appears. Yuri, I noticed Yuri. There's a couple other rental stocks we're moving today, and coming straight up off the bottom. 1, 2, 3, 4, 5, 6. Yeah, that's sort of a pocket pivot type move. But it doesn't excite me. Here's a weekly chart. It's getting some support you can see here, and I don't know. This is closing a little bit off the lows, maybe, and maybe it's going to try and break out here. Somewhat volatile, but doesn't thrill me. Probably doesn't thrill you either, Dr. K.
Yeah, can you hear me okay?
Can you hear me all right? Actually. We can hear you now, but you just.
You know what I think it is?
What is it?
This major company just took over my my internet service provider. So I've never had a problem or any major problems with my internet service provider for the 3 years I've had it. And today is the first time I'm having this problem. So I
Interesting.
just got an email from Sky, who's taking them over. Anyway, what I noticed is that everything seems to be pretty smooth now, but it might break up again. But while I have
Right.
this window of opportunity, I can say something about URI without having to type it to you.
Very
I'm
good.
just looking at the fundamentals and the technical. I like the earnings because they're accelerating. The sales have been very strong, strong high double-digit growth. Institutional sponsorship has increased. It looks like many quarters in a row. What I mean by many, it looks like every single quarter going back to March 2010.
Hmm.
So it looks like, I mean, it's gone sideways. It's choppy. It's a bit sloppy with the 50-day. But on the other hand, the overall, if you pull up the weekly on it, the weekly looks, it's it's a sloppy pattern. It's not as tight as it used to be. If you look at those prior
Right.
uptrends in 2010,
Right.
2011, it's gotten sloppier. So it's not so interesting to me on that basis. But on the other hand, it did have a gap up, a mini gap up on March 5th, and then today it's having a good day. So I think it's worthy of mention to members in the form of a report, but with caveats, just simply because we're in a tough environment for stocks, and this
Yeah.
pattern is kind of sloppy.
Yeah. So, but you could call that a pocket pivot today. So let's go FLT. This has been a one of much interest in the chat room, and I know that someone was buying it off the 50-day the other day, which I thought was a smart move. You had a volume pickup, but not huge volume, not huge hugely above average. And then it tracked tight sideways going into earnings. You saw a pocket pivot, I think, in here, and you're gapping up, but you're at the low end of the range. The stock has had a pretty big move, so the one thing you have to be mindful of is that it's already had this big move, and so there could be some selling into this. I don't think I would be moving into the stock here on this as a viable gap up. Splunk. Splunk is trying to break out on no volume today. I hate this stock also because it'll just do poopy little moves to the upside on no volume, and it really goes nowhere. It's been moving sideways. So so to me, it's that's just what it's doing. This little pocket pivot in here. I think it was a few days ago, and it's moving up with the market. They come out with earnings, I believe, at the end of May. I think on May 30th, and and so it's had a big run, really off the lows. So it's just one that I've kind of blown off myself, just because it's not getting anywhere. It's a little bit squirrely. But otherwise, it's moving higher. Angie had a viable gap up. It's holding the lows of the viable gap up. So if you believe that this viable gap up is valid, you may notice a couple things. 1, 2, 3, 4, 5, 6 days after the viable gap up, and it's down today after trying to move higher up towards 24, holding the 10-day moving average. But notice how you saw the big gap up and then some big volume here. This is a 6-day here. This thing needs to get out of here now. That's the way I look at it. Same thing with Netflix. You notice Netflix, the market's up pretty good, but Netflix is turning red. Dr. K, assuming we can hear you, what do you think about this viable gap up on Angie's? I don't believe that we put out a report on it because we weren't all that keen on it.
Yeah. How am I coming in? Am I right?
Sound fine now.
Okay, cool. Yeah, it looks like the streaming is okay for the moment. Yeah, so this stock is, the earnings are still negative, and industry group's strong, but I don't like that we're looking at negative earnings on a company that has higher risk to it and higher risk environment. So I would generally not play this kind of name. You'll also see that the viable gap up it had back in February, the stock undercut it, so you would have been taken out of your position there. And then
Right.
This current viable gap up, it looks like, well, that porosity probably was tolerable, so you might still be in the name. But in general, it seems like it's higher risk in this environment. So if you're going to do this, I would just go in with a smaller position.
Yeah, and the beauty here is that you probably can use maybe this low here at 22.28, or if you want to adhere to that at 22.61. you're kind of in range of that, so maybe it comes out of there, or maybe just barely undercuts. But you could use that as your selling guide, and you're pretty close to it, so the risk is relatively minimal if the stock, as long as the stock doesn't blow to the downside and just gap down. Somebody's asking about blocks. What is this? Info blocks. I noticed there's a couple of random stocks today. This actually has decent earnings growth, 50% higher on 32% sales. You got some accelerating sales growth here. But let's see here. I'm going to take a look at a few other things. It's supposed to make 24 cents in 2013 and 42 in 2014. So it looks kind of interesting. You're getting a breakout today on volume that is only 13% above average. So I think I'd like to see better volume here. You might have been better off, let's see, trying to buy this move here, which is a pocket pivot right here on this day, which would have been April 17th. So, that probably would have been a better entry point on this kind of a stock. But today you're running 13% above average at 9:46 a.m., so just around halfway through the day, exactly my time, the trading day. And it's trying to break up, but not sufficient in my view. In something like this, I think it's better to try and pick it off on a pocket pivot, so it's a little difficult. I was also looking at, just to kind of throw this one out there, anybody remember the old InfoSpace, which is BCOR, Blue Cora? What a cool name. Cooler than InfoSpace, I must say. But here's a big gap up move. Here's a pattern right here. Stock, if we look at InfoSpace over a long period of time, here's 2000. It had a big move and it blew apart. I will never forget, and Chris, you were there, we were visiting a hedge fund client in New York City on Park Avenue, I think in a hedge fund hotel, as they used to call him back then, and this hedge fund manager had just hired a big internet analyst from Merrill Lynch, and he was paying him $1 million a year salary. And if any of you guys know who Mike Webster is, he still works for Bill O'Neill. He runs money there. I always remember Mike, I'd be in the restroom at O'Neill, and there'd be this young guy tapping me on the shoulder all the time and asking me, how could he become a portfolio manager for O'Neill? And I just kind of brush him off. And then one day I just said, well, you know what? Why don't you just show me your statements? What are you up for the year? And he says, 1,000%. And I said, oh, okay. So I told Bill about it, and Bill looked at it, and Mike, who had been a researcher, was made a portfolio manager, and he's actually one of the lead researchers there now. So it's nice to see Mikey moving up in the world. But the funny thing is, when he was still just barely getting started at O'Neill, coming out of the research department, it's pretty green, we took him with us to New York, and you probably remember this, Dr. K. And we went into this meeting, and it was I believe it was June of 2000. And we were looking at all these internet names that these guys still own, and one of them was InfoSpace. And so we're going through the charts, and everybody's pretty quiet except in the back of the room. And I write about this in our book, and Mike's sitting there in the back, oh, that's top, that's top. And you just hear him saying that's top. And he's basically just talking to himself. But every time he said that, the $1 million internet analyst would give this big harumph. And I remember InfoSpace was one name that they were real big in, and the stock was, let's go back, June of 2000. Let's see if I can pull this little gizmo up. We're at June of 2000. So they owned it, and I remember it was the very beginning of June. We were doing a big workshop there, so it was around $600, and these guys owned it. And so much for your $1 million internet analyst telling you that the stock was undervalued at $600. I guess there must have been some reverse splits in here. I don't think it ever got that high, did it? But in any case, you can see what happened.
No, I don't think it never got into that level. They must have done reverse splits because the price fell so far. But I remember that period very fondly, and it was clearly an indication of just overzealousness, over optimism. And Mike and I went to that internet show in downtown LA, and this was, I think, in June of 2000. And we both looked at each other. We thought there's so much froth and overexcitement with all these technologies that a lot of them don't make much sense. And so we thought that was a further indication that the market had indeed topped in March of 2000.
Right, and it was a climax top, so from our perspective, it was very easy to see that you wanted to be out of all these names, but it was interesting how many people started to think that a lot of that stuff was cheap on the basis of of it trading so much higher, 100 points or so higher, and now it was coming down, so everybody looked at everything as cheap. That was a death call. But that just came up. I just remembered that thinking about Blue Cora, which I guess you would call this a viable gap up. I'm assuming that they came out with earnings today. It looks like they came out with a 36% increase in earnings. Next quarter, negative 44% is what's being estimated. Not really something I would play there, but I just thought I'd bring that up. I've been noticing this iRobot showing up on my screens, and for those of you who aren't familiar with iRobot, we actually have one of their vacuum cleaners. It's a robotic vacuum cleaner. So every once in a while my wife turns it loose and it comes around the corner into my office area here at the house, and you hear this little thing whirring along and vacuuming up around me where I make my messes. And it works pretty well, except when it takes a dive off the stairs, which is done a couple of times. Not sure what's wrong there. It's supposed to sense them. But in any case, they seem to be doing pretty well. You had a Bible.
One of those attack vacuum cleaners, senseless intruders or something? Counts.
I think you've seen that thing roaming around the house.
Yeah, I have.
Yeah, so you're just walking around and you see this thing cruising around, whirring, but it's really small and flat. I've often wondered, how does it get all that dirt? Where does it fit all that dirt? But it seems to work, and my wife likes it because it gets the job done, relatively speaking. Now we just find a robotic cook, car washer, gardener, and other things. Maybe that's where they're going. But in any case, iRobot creates these things. They came in with a 950% earnings increase, and you had this huge viable gap up. This occurred on a 9% sales increase. I think they just surprised everybody. But stock, it is a viable gap up, but it's a little extended now. And of course, if you own the stock and you bought it on the basis, then the low here of 26.30 would be your downside stop. So that's really all we have to say on that one. Is it the nature of the market that we don't see ants anymore on your charts? That might be true. I don't know if I have ants on these charts right now. Let me take a look here. No, they're on there, but there have been a few that I've seen them on. So somebody asks, are the gap ups on earnings due to shorts getting squeezed or new buying, or does it really matter? Well, sometimes it can be a combination of both. I think in most cases what you're seeing, if the pattern's constructive and you see a big gap up, I think that's probably real buying, and institutions are now seeing the situation with the stock, reaching a point where they're comfortable buying. And as we talk about in the webinars and seminars that we've conducted on viable gap ups, when you see a viable gap up, it tells you that the the argument between the bulls and the bears has been decisively won by the bulls. And so in that case, that you're looking at institutional buying. So I do think, though, if you're looking at a stock that is heavily shorted, I'm trying to think of the one that we were looking at, DDD. After earnings on I believe Tuesday it was, the stock was selling off, but maybe just more shorts coming into it, and I think this now is forcing shorts to cover. And the last I saw, there's about 23 million shares short against a float of something like 81 million. So in that case, I think you're getting a short squeeze there. But I also noticed that there have been some Fidelity funds coming into the stock with new positions recently. So they're probably taking advantage of this dip and buying off the lows. Remember, it's institutions who create the bottoms of bases. And remember, there have to be bottoms of bases, and somebody needs to create those. And having worked at O'Neill on the institutional side, I can tell you that frequently that is what they were doing. They don't necessarily buy on breakouts. So there was always the irony of having to go out and advise institutions, that, oh, here's a breakout, you need to buy this breakout. And the guy would laugh at you and say, well, I created the bottom of that base, why the hell am I going to buy the breakout? And so, I think in most cases they're adding to their positions when you see a breakout, or even as they're moving up off the lows of the base. So there could be natural buyers as well as short sellers covering. But it is always a factor, especially in stocks where you have heavy short selling interest. And I think Yelp probably had a number of shorts in there too, and they got smashed. So let's see. Let's go through some more stocks. ESV is Ensco International, I believe. Here's breaking down, looking incredibly ugly, and now turning back around and heading back to the upside. But it's just too. This is not a pattern we would be buying, very V-shaped. So. Noticing, getting back to Generac, some people are noticing generators are big in the Midwest. Bought 2 for Michigan home. Yeah, maybe I need one too. I just use the squirrels that run around here. Somebody says, I am too optimistic and often hold positions too long. Then my winners become losers. Any ideas on how to change and take profits quicker? Well, as most of you know, my approach has been to take 10, 20% profits when I've had them. So in rare cases, like say with the Regeneron, you'll see a stock perhaps go higher. But overall, in this kind of environment, it has been a better way to handle stocks and to ensure that you're making money. Where we've tried to position build and then sit and hang out, just really hasn't worked out in a lot of cases, and we've gotten smacked on a few positions that way. And so I found a more active approach, and the trading has helped. Can you please provide a bit more detail on your Netflix comments? Well, there's not really too much detail. I talked about this earlier, and that is if you're using Dr. K's 6-day rule, and Dr. K, if you're in there and you want to comment on this, if you're using the six-day rule, which says that after 6 days following a Bible gap up, if the stock can't make any progress to the upside, it might be having some issues. And I believe, Dr. K, that's based on your statistical studies
That's
of
right.
actual Bible gap. That's right.
Yeah, and also it's contextual. So we're seeing that Netflix is going sideways here, yet the market's going higher. So it's relative to the market, it's quite weak. So in other words, I wouldn't give it really much porosity at all. If it breaks below, if the low on that gap up is 209.5, and it hasn't gotten there yet, but I wouldn't give it very much porosity unless it if it gets everything's contextual, so it gets complicated. If it gets very tight in here, which it is, then I might be willing to give it a little more porosity, maybe 0.5% or 1%, undercutting the low of the gap up day. But
right.
The negative here is that it's not going because the market's going higher, and that could also be because it had a gap up here. So this might be
Right.
I would give it a little porosity, but not the normal, say, 2 to 3%.
Right. Okay. So you're keeping a tight leash on it, basically.
Yeah.
Let's see some other names. We already talked about Splunk. Centaurus is way up there and just hanging out. Not really anything going on. No buy signals yet in the stock. Has held the 10-day moving average since this gap up with no violations. It looks like so. Here you're violating now, so that almost looks like it could be a sell, but it's hanging in there. So biotech group has been weak. There was a rumor that some biotech fund was liquidating, and that might have caused some of these things to come off, but I think the Amgen situation also was not positive. Workday, I mean, I like this coming up off the lows. You have this big volume support. Let's make this nice and chunky here. But I like this volume support, but the wide ranges kind of bother me, and so I was in this stock, but I just kind of backed away. It's just a little bit squirrely, but it acts okay if you can deal with the volatility. But it probably needs to build some sort of a handle. It's probably not going anywhere from here until they announce earnings, which I believe is towards the end of the month on the 30th, I believe. But it's acting okay. But I did notice, this big spike off the lows of the base. That's a decent thing to see, and I was going to get back. I'm seeing that in Silica holdings, where you ran out of the base, and you came off after they did a secondary, and you got some support in here, and these last couple weeks trying to hold and close tight right here. And then you have this shakeout on earnings, and now you're moving higher. What I would do on this one, and I actually own it right now, bought it earlier this morning, I'm looking at a shakeout +3 type situation, which would go from, if the low here is 1901, then I'm looking at 22 as confirming it. But for a $20 stock, the way I look at it is about 10%, so shakeout +2, 2 to 3, and so I'm sort of seeing that, and I like the way this is acting today so far. I'm expecting it should hold above this big sort of shakeout move, but this is getting back to this idea of looking at stocks that are getting big support off the lows of their base, and now they'll be a little slower to turn, but I think they do turn, and there's still a big story here with fracking, and a lot of fracking is based on natural gas, and we see natural gas trending higher. It's pulling back recently, but I think it's entitled to after this sharp run-up, and it tends, it's a commodity, it's volatile, but I do think that's, fracking, a lot of that's used to pull out natural gas, and I do think that you're going to see potentially this stock could, Silica Holdings could turn here. And so I'm always willing to take a shot if I see something along the lows of the base that tells me there could be some accumulation. I remember Bill and Neil really getting on my case way back in, let's go back, I think it's like 2003. I'm going to try and see if I can get there. But on UNH, I remember we were looking at it, and there's this massive volume, and I think this is it right here. Yeah, this massive volume in the stock off the lows here on top of this other base. And he said to me, when you see that kind of big volume on a weekly chart in the stock, after a big pullback, that's getting big support, he said, and we have to be watching that stock. So we'd actually kind of lost track of it, and it did trend higher after that. So when I see that sort of thing, I recall that, and he was really ringing my bell for that one. But as I said to him, but Bill, you didn't see it either, so but but his excuse was, well, you're younger than me and blah blah blah, and you should be seeing these things, because you're the new blood. Actually, now that I'm not there, I'm not any blood there, but that's another issue altogether. But anyway, so that's what I'm seeing here, and it looks like it's not in a good position. But if you want to draw trend lines, which I love to draw lines on charts, I spend, as I've told many of you before, for me, charts are like pornography. Whoops, what's going on here? Here we go. So you're getting maybe a little trend line breakout here. I don't know, but I should point out I'm watching FB trade, and it's turning off the low, so you're getting a nice pullback. But again, remember, you had a sharp move here. But you could also look at the way I rationalize this is you're getting a sort of a trend line breakout here. This wasn't technically a viable gap up because it wasn't more than 0.75 times the 40-day ATR, but it was pretty close. I think you needed to be up. You were up something like 57 cents on the day, and you need to be up 64 for it to be 0.75. To me, I thought that was reasonable, though, given the fact that Facebook is a big, slower stock, and so this could be seen as constructive. But again, you're up several days, so a pullback here is, if I wanted to buy a stock, is what I'd be looking to buy. And again, I'm seeing this constructive action as it's trying to turn off the lows. Doesn't mean it's necessarily going to work, but what I've noticed in this market, those have been my better trades, and so that's where I'm going to gravitate. Somebody says, you say to take profits of 10 to 15%, but I found lately that unless you're lucky enough to be in a stock that gaps up, buying afterwards has been dicey. Yeah, in a lot of cases, and we talked about Netflix, and he says, and you're lucky to get 3 to 5% before a stock spins out. Well, that's going to happen, so that's why you want to keep tight stops, but I do think also on the other side, when you have profits, you definitely want to be looking at taking profits. And as he points out, breakdowns turn out to be fake outs in this environment. I remember somebody emailing me the other day saying that buys in this environment, buys seem to be sells and sells seem to be buys, and I think that's to some extent true. And the approach that I take is trying to look at things in a slightly unorthodox manner, but still within the way we would view accumulation within a chart pattern. And I'm trying to combine some of this with what I see on the dailies along with the weekly charts. And so that's why I'm showing you the Silica. I think Facebook is similar to that. We thought, ever since we saw, you see the weekly chart on Triple D now, you've got this big spike coming up around the right side. So, may back down a little bit. I would probably look to be using a pullback as a buying opportunity, but you also have Stratasys doing the similar thing, and we pointed out this pocket pivot, I believe, was either here, probably here or here. But they're still a little bit squirrely, and as you come up the right side, you can expect them to build handles, and I would expect both of these, Triple D and SSYS, to do exactly that. But I think your better bets are playing this sort of wild rotation that you see where things break down, form new bases, and then try to come up and out. And and that seems to work. Somebody says LinkedIn, a number of people point out on LinkedIn that this guidance does not materially affect its business. Well, that's good, but you're going to have to tell it to the people selling the hell out of the stock right now. They're spending on expansion. A number of analysts have raised price targets. Is this sell-off overdone? Well, as Dr. K said earlier, he would have been selling on the opening. You can figure that one out later. But the way I look at it, a bird in hand in this market is worth at least 3 in the bush. And so in this case, you know, you could have bagged and take the profit, and then you can watch and see what happens. You are holding above the lows of this structure here and the 50-day moving average, which I think you're close to the 10-week. But you know, that's a pretty ugly reversal. So I think you'd have to see the stock stabilized first. If you're going to buy something on the basis of what some analyst is telling you, I think we just went through a story on InfoSpace, now known as Blucora, just a few minutes ago, and so that kind of tells you what we think about all that noise. Anyways, time for cores. Here's another situation like this, and if we look at this, let's do a little bit of a base study exercise here. I've been watching this, and I've talked about this before. Here's your breakout, a sloppy base though, and it's a Bible gap up that fails. We can see up here it fails, and now here you come all the way around, and notice you come down hard after they announce the secondary. It gets absorbed. You come down again this week here, right here, but the volume is down. Then you pick up volume the next week, and you close in the upper part of the range. Still down, but you're showing some support along the lows. Now we see volume drop, but we come down again. Tries to bounce with no volume. You pick up volume the next week, and notice you close up off the lows, so it's showing a little bit of support action. You pick up volume the next week, showing a little more support action, but still resistance at the 10-week. Now you're trying to come up, and the volume isn't all that impressive going into earnings. So bottom line there is I'm not going to play earnings roulette on this one. But you will notice it's trying to build a base, and you know probably what's going to have to save it here is going to be some big earnings surprise that jacks the stock up, and then it's going to be a viable gap up, but it'll be way up there. Somebody's asking about GIL, and that's not me, but Gildan Activewear. These guys make, well, I think our T-shirts, the Virtuous Self-Investing T-shirts that we used to give away when we went to the Money Show, or the Traders Expo, were made by Gildan, I think. But nice thick fabric. Nice cotton, 100% cotton T-shirts, but you know, stock gapped up here. It's holding the gap up. Close at the lows, but still holding up. Not necessarily sure I would buy this one. Earnings up 157%. Yeah, not too bad. Relative strength's actually moving to a new high. Estimates are for 42% earnings growth. Sales are pretty light, up 8% in the most recent quarter. That's probably a red flag normally, but maybe in this market it means that this Bible gap up works. At the very least, if you wanted to buy this, your stop level is 41.08, the intraday low of this gap up. So, you know, you're only 80, well, less than 80 cents above that. So, 74 cents above that right now at 41.82. So your risk, you know, it's about 2%. That's pretty minimal. So potentially, you know, that could be a turnaround situation there in terms
Yeah, it's
of.
not.
Go ahead.
Not bad. I mean, it's violated the 50-day a couple of times prior. And again, in this market environment, it's tough to play these stocks. But because your risk is so low where the stock is at right now, you might take a nibble on it.
Yeah. Henry Blodgett, another flame out along with Mary Meeker. Yeah, whatever happened to them? I've seen Henry Blodgett out there. I have to say he's pretty resourceful in being so wrong on was it AOL, and still being able to make a pretty good career for himself as an analyst.
A number of names he missed.
Yeah,
quite heavily.
So you know, $1 million internet analyst. That'll do you a lot of good. ADP employment numbers on Wednesday weren't that good, were they? But then today, government numbers wowed the market. Looking forward, should we expect a slowdown in QE, or are we too far away? I tend to look at today's jobs number. I think if you look at what they call the confidence interval, and I'm actually looking for that. I'll probably find it later on today when I hunt around my looking at the jobs data. But I want to see what their confidence interval is, and they basically will tell you they'll announce 176,000 new jobs with a confidence interval of plus or minus 185,000. And they'll say 90% say confidence interval, so which tells you that they're 90% sure that the number that they reported is within a range of plus or minus 185,000. And you see that frequently, which tells you that statistically, the statistical significance of the jobs number really is not there. So they can make it pretty much whatever they want. The fact that ADP came in weaker maybe tells you that you have weak unemployment, but what you're also seeing is the general pace of these reports has been declining. And so I think the market interprets it as, well, you know, the economy's not falling apart according to this number, but at the same time, it's not so good that the Fed is going to stop easing. And as I've said many times to you guys, I think the Fed will just continue easing until at some point the dollar collapses. I don't think they can engineer a soft landing, and I don't necessarily believe that the economy in the aggregate is performing that well that it's going to take over for QE fully. I still think that there's many deficiencies in the economy. There are areas, though, where there is growth and companies that are able to excel in an environment like this, and there have been some strong areas. So I think that's where you want to focus on in terms of what you're buying. Somebody says iRobot is a Japanese stock currency play. We don't get into currency plays. All I know is the earnings were strong, and you had a viable gap up, but not something that I'm just going to play on the basis of a currency play. Somebody does mention that they make a lot more than, shall we say, domestic robots, such as their, I forget what that thing is called, but we actually had our cockatiel riding around on it the other day. But anyways, they also make tactical military robots and bomb disposal robots. So, it's a Roomba, that's what it is. So I'm just looking them up right now. So that might be part of the push there as well, given the recent bombings in Boston. And I think you're probably going to see more of that type of stuff going forward. So who knows? Some of you might know that Danny Pearl, who was one of the first, he's a journalist for the Wall Street Journal, is one of the first people beheaded following 9/11. If you guys remember all those fun videos that were coming out on the internet, Danny Pearl actually was a fraternity brother of mine, who I played guitar with. He was actually a fiddle player, and in college we used to jam quite a bit. And Danny was frequently jamming with us. So, I often think about how many more people am I going to know who die at the hands of terrorists, and of course that's always an open question. So, with that, I think bomb detection devices or robots that help defuse bombs, that might be a big area for growth. Somebody asked, where do you get your ATR for stocks? We get it off of eSignal. Somebody says, when you guys started investing, did you start with small size accounts like many of the rest of us, or dive right into managing money? I started with 3,000 in 1992, I believe it was. So.
Yeah, I started with basically money that I'd saved up from birthdays and things, and it amounted to about a couple $1,000. That was it.
Right, and we turned that. Both of us turned our small amounts into well into 7 figures. Right.
Yeah, it should have been 8.
Somebody says, don't you find that as your account size increases, you're forced to buy pullbacks rather than breakouts? Doesn't your psychology have to change? I think when you're running hundreds of millions or billions, I think that is true. But, excuse me, if you're running, $5 to $10 million account, it's not that hard if you're running in big stocks. Now, obviously, you can't buy stocks that trade 100 or 200,000 shares a day, and that's why you often hear me say when somebody talks about a stock trading 80,000 shares a day, it's like, well, I can't really play there. And I also view that as a sign of quality. Company trading a couple 100,000 shares a day, it's really telling you that institutions are not trafficking in that stock in a big way. You might have your small cap funds out there taking their little 0.05% position in mini cap XYZ XX, but for the most part, I think you just shift up to using more liquid stocks. I don't think you're forced to buy pullbacks rather than breakouts. Psychologically, what might change and what some people might have a problem with, if you have a $10,000 account and you're down 10%, it's only $1,000. But if you're down 10% in a $10 million account, that's only $1 million. And when you start to see numbers like that, that might mess with your psychology. I can remember one of my assistants when she was trading her account using O'Neill methods, and she would freak out whenever something went, whenever one of her losses was greater than one of her rent payments, and she would come running into my office like, "Oh my God, I just lost the rent payment." So she would try and put it all into this sort of equivalency of what it could have bought in the real world. And if you want to do that, then whatever you have in the market is not money you should have in the market. It should be set aside for something else. So whatever you have, whether it's 10,000, 100,000, or 10 million, it needs to be money that you can afford to risk, and you need to be able to think of it in clear terms. And as you get a bigger account, then yes, in order to build big positions easily and to be able to get out of them easily, you want to pick more liquid stocks, and you will find that as you grow your account, naturally you will want to gravitate towards bigger cap stocks. Let's see, we're going a little bit longer because we've had the delay today, which I think cost us 10, 15 minutes. But so I'm going to run through some more questions. CRM off the bottom. Watching this, that might be true. I'm not really seeing anything yet that leads me to believe that's the case just yet. No real big supporting weeks. This is trying to support off the 200-day. So kind of neither here nor there. So I need to see a little more concrete action, a little more rounding out. But potentially it looks like it's getting some tight closes down here along the lows, and it's undercutting the space possible. But I'm not really 100% on that. GPS, gap stores, I noticed this morning was breaking out and gapping up itself. The volume is not real heavy here, though, so that's the one problem I have with it. It's actually negative 20% below average, so not the sort of thing that I'm really interested in buying on that basis. Retail seems to be moving, someone says, and I would say that that's true based on the fact that you're seeing strong jobs numbers, apparently, which gives impetus to the idea that consumers, if jobs are getting better, then consumers are going to have money to spend, blah, blah, blah. And maybe that's true. And so you have seen some retailers moving higher. Although I have to say, stuff like Dr. K, last week we wrote an article, or was it this week, Dr. K? I forget. We wrote it last week, came out this week, but it was on junk food stocks. We talked about McDonald's and Jack in the Box, and McDonald's for the first time tests 50-day moving average and goes higher, and it's gapping up today. Jack in the Box was nice and tight, and I even think IBD finally mentioned it was 3 weeks tight in here, and it's moving higher. 100% earnings growth in the most recent quarter, and I think we said that we really liked Krispy Kreme, and that as long as it held the 50-day moving average, it was probably okay. It was showing some support the last couple of weeks, but this is coming apart now. Violated the 50-day moving average 4 days ago on Tuesday, so that one's out the window. But junk food stocks, not too bad. We've often talked about, in the chat room, we were all babbling about Domino's Pizza and Papa John's Pizza, and that was like last week, and all of these stocks now are up a lot higher. So, it's a junk food market, I think. Junk off the bottom and junk food, so working pretty well there. Someone says their wife assures them that Coors will make its numbers. Well, she must be doing her part to spend money. Somebody says the true skill of analysts is getting someone to pay them $1 million. I agree. FBHS, any thoughts there? Well, it's a Bible gap up, and so the Bible gap up would occur here. Not really too extended. He came off of, looks like about a short little 4-week pattern here. Maybe you'd add another week if you want to count this high on the weekly chart. And you have a gap up today with a low of 38.50. That's about $1.50, close to 4% lower from where it's trading right now. So that's your risk on the downside. But we cannot tell you whether it is going to go higher necessarily. I'm watching Facebook trade here, coming up off the lows just a little bit. Let's go look at real quickly. Let's look at our handy dandy. Sure, maybe this is where you start nibbling on it, starting to possibly making the turn here. You notice here the MACD got real nasty here, and now it's actually on this last low, not really that bad. So probably a lower risk place to try and nibble on it. I do think the stock will go higher if the market goes higher. That's my view, and you may have to be a little bit patient with it. But it seems like there are institutions moving into it, and again, the estimates on Facebook for next year are 78 cents. And when you look at this year, 57 cents. So when you look at some of these $20 to $30 tech stocks frequently, or internet-related stocks, and a lot of them be making no money. Look at Yelp going bonkers up around the above 30 right now, and it's got no earnings. So, I think that institutions will look at this, and if you have to be in the social media space, if you're looking at a name that is, quote, big social media, then I think Facebook is it. Let's see. What do you think about these theories that Japan's QE will move money into U.S. stocks? Well, I think QE everywhere can move money into stocks. So, Dr. K, follow through today if we hold these levels?
Well, on a traditional basis, that would define a follow-through day, basically being up more than the threshold levels on higher volume, of course. But the model's been on a buy signal a lot longer, and because of the QE effect. And the other thing is that the Nasdaq did not ever correct more than 6%, so you wouldn't need to wait this long for a follow-through day.
Right, and the other thing here is that once the market goes to a new high, you're already in a de facto new uptrend, so you don't need a follow-through day to tell you that, I think. Somebody's asking a couple more questions here. Somebody says Dunkin', and I noticed, Dunkin' Donuts actually did break out yesterday. America runs on Dunkin', not Krispy Kreme. You may be right there. Double L, we already talked about Bible gap up, so far hasn't broken down. NSM, I'm looking at these, okay, and I'm glad someone mentioned this because you're starting to see the same thing again, rounding out the lows of the base. You've got 2 big weeks here, and I'm glad I almost forgot about this one, but the stock, maybe it's rounding out, and maybe it's going to try and go higher from here. And you look at this, you're not getting a lot of selling along the lows of the base. You undercut this little low in this handle. I thought if this was a cup with a handle, 4 weeks is not going to be enough to set up a big move, and that didn't happen. Now you're setting up a longer cup, and this one might be the one that works. I noticed Aquin Financial's trying to get, whoops, you know what, let's go. OCN is trying to rally here, but it's a similar sort of thing. It's a little sloppier, but CoreLogix is another one, and it has actually been able to move back above its 50-day, 10-week moving average, and HLSS, Home Loan Servicing, is basically in a sloppy-looking base, but you notice the big support here off the lows. Maybe these are trying to set up. I think, though, the one that I'm interested in would be NSM. I kind of like this a little bit better. But we'll see. I'd like to see some sort of a buy point in here. Would this be, Dr. K, would this be a pocket pivot bottom fish right here off the 50-day?
Let me see here. I mean, this looks to me like that it would be, yeah. I mean, it's reasonable, and it clears, so that would be I would call that it's kind of a lower quality pocket pivot is the problem. Just because it's, just coming up through the 50-day, whereas the markets have been going to new highs, so this is maybe a little bit of a laggard in some ways, and it's choppy. It's been a very choppy pattern all along prior to that.
LVS
earnings and sales are good.
I mean, it's got the numbers, and it's coming up around, so I'm wondering if that's going to move higher. These are all extended, so I don't really know if these are stocks I'm going to buy here. Well, they're not, obviously. Somebody asked about Google. I think we talked about this last week. You did have a trend line breakout here. If you draw a line across all these tops, you have this trend line breakout on earnings, and it has managed to move higher. Now you're forming a cup, and maybe this means you need to have a handle here. But the stock's acting well, and it's one of the stocks driving off the lows along with Apple. And Apple, the way I looked at Apple over the weekend, actually you have 1 wave, 2 waves, 3 waves down in the stock, it looks like to me, and that's usually going to tell you that you're at least going to try a more concerted uptrend. Maybe it carries to the 200-day moving average. But we've been on the chat room. I've been on the chat room telling people that would probably be what drives the Nasdaq to new highs. And lo and behold, this week that's exactly what happened. So, anyways, I think we're kind of running out of time here. That's pretty much where we're at on what's going on today and what's going on with the market. It's still a very challenging environment, so you can get a sense that I've taken sort of a different spin on it and trying to work my way into, say, less orthodox buy positions, although it is based on buy points. So, Triple D, the pocket pivot moving up. I think Facebook, I think yesterday's move is pretty strong, and pullback today affords a buying opportunity in my view. And that's the sort of thing that we're looking for. So, anyways, that's really all we've got time for. Anything else, Dr. K? Any final words of wisdom?
I think it pretty much stands. Let's ride the trend.
All right. All right, we went for a long time today, but hopefully that makes up for the botched microphone, or actually it's the internet service.
No, it's the internet for sure.
Yeah.
Because the double microphones wouldn't fail, but yeah, I can tell it has something to do with that. So
okay,
I'll be on the phone with
hopefully next week they have it straightened out. So
yeah.
All right, you guys, thanks for showing up. Somebody keeps hitting me with FLO. I'm just gonna throw it up. Maybe that's a pocket pivot right there. Flowers Foods, but it's a food stock, so there's a pocket pivot right there. If you love it, I guess you could buy it on that basis. And that's all we have. So thanks for showing up, everybody. We'll catch you next week. Take care.
So long, everyone.